What's up, guys? Welcome back to Compound Interest. In today's video, we're going to be doing a new format. That's why you might have noticed all the older videos are deleted. I had not that many videos. I had a couple, but they were more random things about finance versus now I want to do a more streamlined type of video on a lot more frequent basis. So I'll be having videos every single day of the work week, so not on the weekend obviously because the market's closed, but I'll be having a newer format where I go over some of the stuff that happened today in the stock market. So not that that's super important if you're a long-term investor, but I always find it interesting, so I still keep up with it. Even though I don't usually buy or sell much, I buy or sell something every few months, but I still like to keep up with things, and I watch all the financial YouTubers and stuff because I find it interesting. So yeah, first I'll go over some of the news and whatnot, and I'll give a little bit of commentary on it because there's a lot of interesting things happening with the recent correction and whatnot. It's been pretty great because a lot of the stocks I wanted to buy are finally getting down to more realistic prices. For example, if we look at Block, which I think is a super cool company, it was at $150 when I started watching it, and now it's down to in the 50s. It hit 59 the other day, so it's finally getting down to a more reasonable price. I've been waiting to buy a lot of stuff, so that's what I've been pretty excited about that recently. And then after I do some news and whatnot, we will take a look at my portfolio because I want to give you more live updates. So the overall portfolio value, what stocks I bought and sold, I want to be really transparent so you can see all the moves I'm making and stuff like that. I think it'll be really fun. So this is my Robinhood portfolio. Right now it's at $7,900, and this isn't really a complete portfolio right now. The only thing I have in here is Meta stock, which I bought at $206 is my cost basis, and I have 100% portfolio diversity because this, like I said, this isn't really a fully built out portfolio. This is just Robinhood. So as the prices of stocks come down more, I will be adding new positions to this. So it won't be all 100% Meta stock, but I did want to talk about this because it's down quite a lot. I bought it on this major dip here on earnings. They forecasted 3% growth or something, so it tanked the stock. I think it's irrationally sold off, and I wouldn't expect revenue to keep growing at 3%. I think it'll probably speed up with the new metaverse goggles and whatnot, combined with Reels. They'll probably monetize that better in the future. It's I don't know if it's a loss leader, but it's definitely not as profitable as a lot of the other stuff on the platform. And to compete with TikTok, they've been pushing Reels a lot more. If you don't know what Reels are, it's like TikTok, but it's on Instagram and Facebook, which obviously Instagram is owned by Facebook, or Meta, as they're called now. So I think my thesis basically is that they'll be able to better monetize the platform in the future, and then they'll have a lot more Oculus sales and things like that. So hopefully the stock will go up with that, because even if revenue doesn't increase by that much, it's still a good deal. It's I forget what I put in my model, but I think it was 5% revenue growth or something would be enough to get a 15% compounded return based on my calculations. So that's definitely would beat the market, and I think there's easily a good chance of having higher than 5% revenue growth. So yeah, I like that stock quite a bit. Another stock I've been looking at is Citigroup. Now this one's interesting because Berkshire Hathaway actually bought this. If you don't know, that's Warren Buffett's company, and that's actually how I found it, because I don't like to copy the investments of like famous investors or anything like that, but I look at their stuff and then analyze it from there, because it kind of narrows down the potential investments. Like if Warren Buffett buys something, it's like at least pretty good, not because he bought it, but just because he buys good things. So it gives you like a nice group of nice stocks to analyze. So I typically do that. And Citigroup was one of the ones that stood out to me, mostly because of the share buybacks and the price. It's very cheap. Right now it has a PE of 5.56, which is very low. Typically for something like this, it would be probably 8 to 10. And then another way you can value banks is looking at the price to book ratio, which you shouldn't do that for like every company, but like banks are a good example of where the price to book ratio can be useful. So it says the price to book is 5.3, which is also quite low. If you don't know what price to book is, it's basically like if you were to liquidate the company. I guess that would be tangible book value, because this would include goodwill, but I should probably check what tangible book value is. Okay, so tangible book value would be $79 a share. So that's if you were to purchase all the shares and liquidate the company, sell everything off, pay off their debt, you would end up with $79 for each share, and they're currently trading at $45. So that's a pretty good upside. And based on my calculations, which I'll show you in a second, I'm using the Everything Money calculator for this, which it's an okay calculator, but I need to make like an actual model. I have a discounted cash flow model for this, but it's like on the same level as the Everything Money calculator, but I need like a more complex one. I need to make that to account for shares outstanding and stuff like that, because this doesn't really have that. But using the Everything Money model with negative 2% growth, which is like probably on the low end of the potential growth, over the last 10 years they've had basically the exact same revenue growth, or it hasn't grown at all basically. Over the last year it's down 4%, so like it's a pretty steady company. So for the next 5 years, if they had negative 2%, that would be like on the low side, in my opinion. I could be completely wrong, but that's just what I think. Also, their lowest profit margins were 16.8% over 10 years, or not their lowest, but over 10 years it's been an average of 16.8%. And then more recently, we have profit margins of 25%. So that would probably be on the more high side. I only put in 17% margins just to be conservative, but they could definitely do higher than that. So just to be conservative though, put in 17%. And then for the PE, this is also, in my opinion, conservative. I had a little bit of trouble on the PE because from my calculation, it should be like a 12.5 PE, I think I got, just based on like historical averages and stuff for the S&P 500. But I could be wrong on that, because that seems kind of high, a 12.5 average. Not that you would buy it at that, but like that would be fair for like a company with no growth. But since that seemed kind of high, and the growth in this model would be negative 2%, I put in a PE of 8. So I feel pretty okay with that PE. And then the discount rate, I like to do 15%. So basically, if all of these things come true in this model, and I buy it at the price that I'll show you in a second, you would get a 15% return. So basically, if it happens like this, this will be the return. But it might not happen like this because it's a guess. And like I said, this doesn't even take into account the share buybacks or the dividend, which I'll get to in a second. And the buy price with these assumptions and a 15% growth rate would be $41. So essentially, if you buy the stock at $41 and all of these things happen, you would get 15% gains every single year for 5 years. But then if we go over to the financial statements and scroll down, we can see, I forget, I calculated it before, but I think it's like a 3% share buyback. Let me see. They might have it on here because this is everything money. Let me see. Okay, shares outstanding have decreased by 28% over like the last 10 years, I think. So I don't know what that would be. That's beyond me in like yearly rate. But most of that was done in like the last 5 years. So like, as you can see, they used to have almost 3 billion shares outstanding. Now they're down to 2 billion shares outstanding. But most of the buybacks started around 2015. So that was done actually in the last 5 years. They've decreased the shares by 28% or whatever. So that's pretty like substantial. And basically, if you don't know what share buybacks are, they are giving you more of the company. Like, you actually get to keep that. So if they take out, like, if they buy back 3% shares, you have that much more of the company, and your shares will be more valuable. It's like if you were to split up profits amongst like 4 people, let's say there were 4 shares, and then the company takes off one of the people's shares, then the profits would be split between 3 people. So you would have more of the company and your shares would be more valuable. So there's that. And then on top of this, I don't like dividends that much because it just complicates things. But they do pay, I think this is, I don't know, it just says 4.32. I assume that's percent and not dollars, because that would be an insane dividend on like a $40 stock. It would be, I guess, 10% dividends. So yeah, I assume that's 4%, but I'm not counting the dividend in my model. That's just, that's on top of everything. So if this stock gets down to $40, I'll probably end up buying some of it, and then I'll keep some more cash on the side in case it falls further. But yeah, this is one stock I'm definitely keeping my eye on it. The only real downside with Citibank, which if you know much about bank stocks, you probably already know this, but the return on equity is quite a bit lower than like an average bank. Usually you want like 10% return on equity, and they only have 8.5. So that would be a downside to Citibank, but I think it's okay. It's just so cheap at this point that I don't mind it at all. So I hope you enjoyed this video. If you have any questions or comments or things you want to see on the channel, maybe there's a stock you want me to evaluate, definitely let me know in the comments. Also, if there's any changes you want to have in the format, I'm kind of experimenting right now. Like I said, I want to put out a lot more videos and stuff, and I want them to be really good and informative and enjoyable. So yeah, definitely let me know in the comments, and thank you so much for watching. Also, if you want to get a free stock, check out the Robinhood link in the description, and then deposit like $100 or whatever the thing says to get a free stock. And if you go through my link, I think I'll get a free stock and you'll get a free stock. You might even get a few. Honestly, I don't know what the deal is, but I know it's good for both of us. So check it out if you want to set up a brokerage account. It's in the description.